People are always surprised at how cheap PMI is. Yeah, I'm talking about private mortgage insurance. That's that thing that you got to pay if you don't make a 20% down payment. And for whatever reason, it's been burned into our minds that PMI is this awful thing. It's really expensive and you have to avoid it at all costs. I'm actually going to bust that myth right now. But before I do me a favor, hit the like button. Make sure you're subscribed to the channel so you get more videos like this. So let's dive into PMI and basically why it's really not that bad of a thing. Now, in most circumstances, most buyers, if you look at statistically, the majority of people that are buying a house, they've got like a 720 or higher FICO score. Yes, you can get a loan with down to 500, but that doesn't make up the majority of loans that are completed in the US. So if we're talking about most of y'all, most of you guys are going to fall into this bucket where PMI is actually really cheap. In fact, it's as little as 0.1% of whatever you borrow annually. So let's just put that into perspective. Let's say that you have a $500,000 loan. PMI is as little as $41 per month. Wait a minute, $41 a month for PMI on a $500,000 deal? That's nothing. That's a drop in the bucket. And that would be if you were doing a 15% or less down payment. So you didn't put 20%, but you're between 15 to 20. But let's say that you're like a lot of people and you only put 5% down. Well, if you only put 5% down, that PMI on that same $500,000 loan, it jumped all the way up to $79. That's barely anything. PMI can be very, very cheap if you've got decent to good credit. So this PMI is not something that you should be afraid of. And if you follow along on our videos, you would have seen we posted another video that shows you how Fannie Mae and Freddie Mac, which make up the majority of all the loans that you guys get, they're actually charging you more if you make a larger down payment. What? What's this guy talking about? That doesn't make any sense. Check out the video. They're doing it, guys. And because of that, you're actually going to pay a higher interest rate for making a 20% down payment. I know that doesn't make sense, but that's the way things are being ran at the government. So when you're factoring in, does PMI make sense? Does it not make sense? You also have to factor in that you're probably going to have a higher interest rate, meaning a higher monthly mortgage payment if you put a 20% down payment. I know it's kind of like opposite day or whatever. You're like, wait a minute, I'm being rewarded for putting down less. I don't get it either. I don't make the rules. I'm just teaching you guys how to play the game. So as far as things go, PMI is actually not a bad thing. And in many cases, you will actually pay less per month versus what you would have paid in the same equivalent of interest rate and PMI with putting less money down. So don't be afraid to look at that as an option. Obviously, you got to do what you can sleep at night with, but at the end of the day, you should not feel like you have to put 20% down. It doesn't work like that.